Right, best than that, we get over to Dutch Brothers. This is the last one we're going to cover. Another stock that Steve and I secretly quite like, I think. We've covered it a few times. It's gone from being sort of wildly unprofitable and being very difficult to see how it was going to go, hence it got shoved in the capital incinerators, to a company that's getting more and more interesting as the days kind of tick on, Steve, I would say. I pulled its mission down for you, Steve, because I don't believe I've ever read this to you, and I think it's quite funny, really. Dutch Brothers' mission is to be a fun-loving, mind-blowing company making a massive difference, one cup at a time. These guys essentially sell like frosted milkshakes and stuff like that. It's meant to be a coffee house, but I don't think they actually sell that much coffee. I think the vast majority of things they sell is like sort of like 3,000 grams of sugar, sort of like milkshakey kind of frappe kind of things, which it reminds me of that root beer I was telling you about last week, Steve, where I bought some American imported root beer and it said on the back of it had 50 grams of sugar in the can, or 17% of my daily allowance. It's only the Americans who think you can smash in 250 grams of sugar in a day. But yes, we shall see. That's what you get when you let the food industry decide what your daily allowances are. But anyway. Dutch Brothers revenue, very, very good. 415 million on the quarter. It was a beat on expectations by around 12 million, and it was up 28% year on year. So really good. Adjusted EPS came in at 26 cents, and the street was expecting an adjusted EPS of 18 cents. So that is a huge beat. Over that. Same store sales, Greg's weep into your sausage roll, it was 6.1%. But if you actually adjust out franchises, you'll be weeping even more because it was 7.8% on company owned. Seriously good stuff. And this was both an increase in the amounts of transactions and transaction values. So they were getting their staff to work harder and getting people to buy more, which is pretty incredible, really. I mean, if you ever look at anybody talking about Dutch Brothers on the internet, you will basically see that, I never get to go because every time I turn up, there's queues out the door and I just don't fancy waiting in it. If Dutch Brothers can speed up that service, Steve, they'll get they should do rather well. In terms of the guide, they said revenue is going to come in at about 1.6 billion on the year. The street wanted 1.585 billion, so it was a nice hefty raise. About 285 to 290 million of adjusted EBITDA on the year. That was also raised. They reckon same-store sales is going to net out as being about 4.5%, which is still very, very good and way above cost inflation. I think they're going to spend about 250 million capex, 160 new stores or so. Yes, opened 31 stores. So when Steve and I covered this last time, or the time before that, or maybe the time before that, they were basically talking about they don't really like the franchise model because they prefer to own and run these kind of things themselves. I think they do a better job of it than the franchises. They're not stopping the franchise model. They're just going to be a bit more picky about who they choose. So of the 31 stores that opened, 30 of them were run by the company itself. So only one guy made it through the net. About 55 million of operating income on the quarter, which led to 38.5 million in net income on the quarter. That's about a 75% jump. So yeah, I thought this was a pretty decent report, this one, Steve. Up about 25% the stock this year. About 21.6 of that was this week alone when I wrote this. I don't know how it's finished today. It was around the 11 billion market cap. Another one with 130 PE. But at the moment, Steve, I don't think you can judge it on that. I think this looks very good here, Steve. I am interested in it quite a bit.
Very interesting. That, as you say, certainly can't be based on its valuation. It looks pretty high at the moment. And if you look at the stock chart, pull up the kind of 5-year view, this doesn't look like the obvious moment of weakness. What this could be is the moment where it starts to kind of get ready and take off here a little bit. So price to sales is reasonably high for this kind of business. Price to earnings is high for any business, but it's set to come down quite a bit next year if you believe the analysts, which I'm not really sure I do. With these kind of things, I was trying to sort of get my head around a little bit what kind of a business Dutch Brothers is meant to be, sort of where it tries to position itself with consumers, because I've never been in one. I'm not even sure we have them in the UK, and I suspect they're a long way off. So it feels to me like I want to find out what kind of thing I'm looking at here. Am I trying to look at a Paul style bakery, or am I trying to look at the coffee chain that you and I proposed at one point? But it turns out what you're looking at is more down the lower end of things here. I asked what sort of perception I asked Gemini actually this. What sort of perception does Dutch Brothers have with customers? Is it value? Is it quality? Is it artisan? Is it what? And they said Dutch Brothers have cultivated a strong and unique brand perception with customers, which is a key driver of its success. Here's a question of how they're generally. Here's a breakdown story of how they're generally perceived. The company's brand identity, connected to this mission statement, you said, is built around the positive and uplifting customer experience. At that point, I stopped reading. They say they have a youthful and energetic vibe, which I also stopped reading, and a drive-through focus, which emphasizes speed and convenience. And that makes sense to me. Value-wise, they are known as best value around. And analyses have shown that Dutch Brothers customers perceive the company as offering the best value for money compared to major competitors like Starbucks and Dunkin'. That's actually something I quite like as a kind of organization. I tend to think things that are priced towards the lower end of stuff tend to be pretty durable, and they have a competitive position that I can understand and see what attracts people to. The price point of Dutch Brothers drinks is generally more accessible than Starbucks, making it a popular choice for budget-conscious consumers, such as college students, according to Gemini anyway. And then it got on to quality and product, and it basically said, yeah, not so much on this front. It said customization and variety is known for its extensive and customizable menu. Good. Focus on flavor, not just coffee. So it does roast its own beans. The brand is less of a coffee connoisseur destination, they say, which is a polite way of saying it's not very good. Many of its popular drinks are heavy on syrup, sugar, and other flavorings. This appeals to a broad audience who may not be seeking a strong traditional coffee flavor. Some sources note that the coffee itself can be mild or watery compared to other brands, but this is a trade-off many customers are willing to make for the overall experience and variety, not a traditional artisan perception. So that gives you an idea of what we're looking at here, and I'm absolutely fine with that. I am very much in the camp that says, okay, there is definitely a market for LVMH style coffee. But this isn't attempting to fill in that space. This is attempting to fill in the want coffee, want it to not taste like coffee? Sure, here you go. Doesn't cost very much. And I think that can absolutely work. And their same-store sales growth is very, very good. Their revenue growth is excellent. And as we saw, same with Toast that we were talking about slightly earlier, revenue growth is fast. Growth further down the income statement is faster. So adjusted EBITDA, why not? Is 37%. Adjusted EPS is 36.8% because presumably they thought 37 was their favourite number this time. But in all seriousness, these are strong results. I can see why this thing is going up. The big question to my mind, I guess, then is this at the start of its kind of breakout point after having been down for quite a bit? Or is this back up to a level where it struggled to get past before? My instinct, if I were forced to guess, might be the former here, that this is now at the point where it's actually close to worth its valuation. I mean, if it was trading at around this sort of price 5 years ago, I think, then you're not going to be claiming that. I mean, at that point, it clearly was in expensive territory, given where the business was. It's up 51%, but it did have a bit of a jump 5 years ago that took it to above where it is now, and there's no way it was worth that then. Is it worth this now? Yeah, maybe. The business has flipped over into making some good money, Steve. Be interested to see where it goes.
Yeah, I think I agree with that, Steve. I was really interested to listen to the call because they were really bullish on the call. They weren't so much the quarter before because the transaction growth was a little bit slow. It's about 1.2%, but that's like trebled. So they were really happy. They basically said that they're not seeing any consumer weakness in their in the customers, which I think is pretty interesting because it kind of de-risks the back end of the year for you. Because if you think the coffee prices are going through the roof, I don't know if you've tried to buy any coffee recently, even just the freeze-dried stuff's about £8 a tin. But the good news for them is they basically just sell you a bucket with milk and syrup in it. and dairy prices in America are going through the floor. So I really think the reason they're giving you better adjusted EBITDA figures is essentially because they don't really sell coffee, so they don't have anything to worry about there, and they do sell milk, and that's getting cheaper, and they ain't going to pass that cost on to you. They're just going to get more profitable. So I think the back half of this year could be pretty interesting for them. It'd be good to see if this plays out how my head thinks it will, Steve. Yes, it's part of the capital incinerator, but I feel like maybe it could be the one that follows Toast into growing up to be a big boy position. But we'll have to see about that.
That's very interesting. I'm sort of fascinated by the idea that the coffee company, on the face of it, is actually fairly well protected from rises in coffee prices by having coffee as a relatively low level ingredient in its stuff. But I suppose that raises the interesting question of sugar and the way the US administration is currently thinking about that. Interesting to see that they're still showing very, very strong growth. And importantly, the reason I got into all this stuff about how customers perceive them was because I saw that their same-store sales growth was largely just driven by selling more stuff, not by pushing prices. And if you think what they are meant to be is positioned towards the value end of things, being able to hold your prices quote unquote down or where they are while still bumping revenues along at a pretty big clip is very impressive for this type of business. And bear in mind they are doing that in the face of kind of GLP-1s and so on and so forth. People are not busy junking their morning coffee for their morning coffee alike thing. But it does seem pretty cool, Dutch Brothers, and feels like the kind of place where I don't think I would fit in. I don't really want to have my coffee made for me by a broista, as they call them. That sort of thing makes me want to. Well,
You've just put me off completely.
Yeah, that makes me want to go short this company, if I'm honest with you. But the numbers are much more impressive, put it that way.
It makes you want to vomit that, like drinking a bucket of sweetened milk.
Yeah, quite possibly. Anything else on this one, Steve, or should we wrap it up there?
That's it, mate.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.